Welcome everyone to the latest 6-minute CEO segment from Osisko Mining. I'm John Brzezinski, the Chairman and Chief Executive Officer, and I'm here today with Don Nagavan, our Chief Operating Officer, to discuss the eventual mine plans that we have for the Windfall deposit, which is our key project located in Quebec, Canada. We've had tremendous success in defining well over 6 million ounces, and we believe we're on our way to 7 million ounces. The average grade of the deposit right now in measured and indicated is about 9.6 grams. We believe that'll go up to about 10. But a lot of the market has been focused on the drilling or is well aware of the drilling that we've done on the project. But we've also done a lot of underground work in terms of bulk sampling and ramp advancement to get the project ready for that feasibility. And this is going to be what we talk about today. Earlier this year, we put out our updated resource on the Windfall project, showing approximately 6.1 million ounces in the deposit. As we complete the program, as I mentioned earlier, we believe that number is going to edge up towards 7 million ounces. We're targeting 3 to 3.5 million ounces of measured and indicated for the final resource, which should come out pre-Christmas in preparation for the feasibility, which we expect out early next year. During the progress of our very large drill program at Windfall that we've been using to define the resource, we've had a parallel program of underground work to the point where our exploration ramp today reaches down approximately 550 meters vertical. That represents about 9 kilometers of underground access to the deposit that we've used to do both bulk sampling and set up underground drill stations to accelerate and make the drilling underground on the infill program less expensive. If I wanted to show you an example, a little bit of a heavy one. This came out of the underground access into the link zone as we've been driving that development ramp forward. I don't know about you people online, but I've never seen gold veins in rock outside of cartoons and things, but we actually have gold veins in rock. So maybe, Don, just a little bit about the additional infrastructure that we have underground here.
So having the ramp at Windfall gives us an extreme advantage over other deposits. We're about 3 years ahead of any other project of this kind, having 9 kilometers of underground development, safety bays, wash bays, ventilation to supply the mine with fresh air and also exhaust the mine. It gives us a quick turnaround time after blasting. So miners usually only have to wait for blast clearance for about 30 minutes before they can get back to their headings and get back to work.
The results of the preliminary economic assessment that we did following this spring's resource update, but using $1,500 US gold, we showed a mine that has approximately 300,000 ounces a year production for the early part of the mine life. We expect that to show out as a full 10-year mine life by the time we get to our feasibility. But they give us a net present value on the deposit of approximately $1.5 billion. With capital costs of approximately $550 million to build and an internal rate of return after tax of approximately 39%. These are very robust numbers based on the interim resource that we have. We do expect to see them move up as we complete the work. And keeping in mind that if we were to use spot prices today, these would be, again, much higher numbers. For instance, if we were using $1,800 gold, we're looking at an NPV well over $2 billion, an internal rate of return after tax, which is close to about 50%. And of course, those numbers just get better as the price of gold moves up. The deposit, as it stands right now, is approximately 2.5 years away from first production based on this scenario. The summary of all the work and where we're hoping to get to by the time we have the feasibility, again, is to show a mine that will produce somewhere north of 300,000 ounces a year. Over a 10-year span, the capex should be again in that same ballpark of 500 to 550 million Canadian to build. This is truly a unique deposit in the Canadian and North American landscape right now in terms of the advancement of the project and the overall grade. We're looking at all-in sustaining costs of around $600 US per ounce based on the PEA. We expect those numbers to come down a little bit by the time we get to the feasibility, but it puts it in a unique class of the lowest 25% or the lowest quartile. If we were to look at where the Windfall deposit would sit if it was in production today based on the numbers that we have in the PEA, we would certainly be top 5, both in Canada and the US. In terms of cash flow, assuming that we get to our target of 300,000 ounces a year plus with our all-in sustaining costs of about 600 US, if we dream a little bit about where the price of gold is going, and if we see $2,000 gold or north, we'll be clearing about $1,400 US per ounce. And at 300,000 ounces per year, that's well over 400 million of free cash flow on an annual basis. I remember when we were finishing the work at Canadian Malartic and putting that into production, it was a similar cash flow profile that we had for that very big mine. It's obviously gotten bigger and better over the years. But it gives you an idea of the significance of the cash flow that we might see coming out of the Windfall project. What all of our drilling success and the advancement of the work underground that we've done, being able to put together this high-grade deposit in a very safe jurisdiction in Quebec, Canada, there's a real scarcity value to this deposit. We currently trade at about a $1 billion market cap. But if we were to look at similar mining companies today, based on about 100,000 ounces a year of annual production, the valuations in the market are sort of between $1.5 billion and $2 billion. When we're looking at a 300,000 ounce a year plus producer, it gives you a very quick piece of math to what our ultimate re-rate should be once we get through this completion of work, permitting and construction phase and get into actual production. There's tremendous upside potential in Osisko Mining Corporation based on us completing the work that we have to do. Again, our schedule is that we expect to have the resource drilling complete this fall, final resource out by Christmas, the feasibility study out early next year, which will lead us into the permitting phase, which again, typically in Quebec takes about 12 months. We hope to achieve that a little quicker, and our construction cycle would be about 12 months. So first production 2024, first full year of production 2025, and this would be one of Canada's and certainly one of North America's new largest producing gold mines.